Welcome to Breaking News to Trading Moves. Today we're looking into some developments out of Turkey regarding some pretty substantial aviation and defense plans.
That's right. News reports indicate Ankara is looking to buy hundreds of commercial jets from Boeing and also a good number of fighter aircraft from Lockheed Martin.
Okay, hundreds of planes sounds like a big deal, but there's more to it, isn't there? Something about conditions.
Exactly. It's not just the number of planes. The key detail seems to be this demand for over $10 billion in local production offsets. That's tied into the deal.
$10 billion. Wow. And the whole thing is apparently linked to some high-level political meeting outcomes as well. So conditional.
Very conditional. And that's really our focus today, figuring out, based just on this news flow, who stands to benefit immediately if this goes through, and, well, who might face some headwinds.
Right, let's focus on the structure. You've got the commercial side, the defense side, but this local production demand seems critical.
It is. That $10 billion offset figure really changes things for the companies involved.
Can we break that down a bit? What does local production offset actually mean for, say, Boeing or Lockheed Martin in practical terms?
Sure. It means Turkey isn't just, buying finished goods off the shelf. They're saying, okay, we'll buy these, but $10 billion worth of the work or value needs to come back into Turkish industry.
So that could be things like setting up manufacturing in Turkey or transferring technology.
Precisely. Joint ventures, building parts locally, maybe even R&D centers.
Yeah.
For the U.S. companies, it means, well, you get the big order, but you have to share some of the work, maybe some of the tech. It's a trade-off.
Got it. So it's as much an industrial deal as it is a straight purchase. Okay, with that conditionality in mind, let's talk winners. Who gets a direct lift from this, assuming it moves forward, starting with commercial aviation?
Well, the most obvious name on the commercial side is Boeing, ticker BOB dollars, in order for hundreds of jets. That directly helps their backlog and potentially their production rates, especially for narrow bodies.
And if Boeing's narrow body lines ramp up, you immediately think about their suppliers. Spirit AeroSystems, SESPR, comes to mind.
Absolutely. Spirit SESPR is a key supplier, making the fuselages, other big structures for the 737 MAX. If Boeing gets a big order like this, Spirit sees that demand almost instantly. It's a direct beneficiary of higher volume.
Okay, so Baby A and SESPR on the commercial airframe side. Let's pivot to the defense part of the package. Lockheed Martin, LMT, seems central here.
Yes, reports mentioned a large F-16 package and, ongoing talks about the F-35. So Lockheed Martin, LMT, builds both platforms. They're right in the middle of it.
And the engines for those fighters.
That brings in GE Aerospace, ticker ZE. Many modern F-16s use GE's F-110 engine. So a big order means new engine demand, plus all the spares and support that come later. It's a long-term benefit for CE on the defense side.
Interesting that ZGE comes up again, because if the commercial order is heavily weighted towards the Boeing 737X, GE is involved there too, right, through the engine joint venture?
It's exactly right. The 737 MAX exclusively uses the CFM ADAP-1B engine. And CFM International is that 50-50 joint venture between GE Aerospace and Svanvien Aircraft Engines of France.
So if Turkey buys a lot of MAXs, GE benefits significantly from the commercial engine volume as well.
Yes, they're sort of positioned to win on both fronts here. The defense engines for the F-16s and commercial engines via CFM for the potential 737 MAX order.
Okay, that makes sense. Now, sticking with the commercial side, if you have hundreds of new jets entering the fleet, are there other winners down the supply chain, maybe component suppliers?
You could look at companies like TransDigm, ticker TDG. Their whole model is based on proprietary components, things like pumps, valves, actuators, specialized parts.
Parts where they own the design.
Right. And as the fleet grows, the demand for these high-margin proprietary spares and replacements grows over the decades-long life of the aircraft. So a big fleet order like this feeds directly into TDG's long-term business model.
Okay, so we have Boeing, BE dollars, Spirit SPR, Lockheed LMT, GE, and TransDigm TDG as potential direct beneficiaries. Let's flip the coin. Who might face headwinds or be displaced by the specifics of this deal?
Well, one group that could face a structural headwind are the aircraft lessors. Think AerCap, AER, or Air Lease, 1Aller.
Wait, why? If Turkey needs hundreds of planes, wouldn't lessors normally be involved in financing or providing some of that capacity?
Often, yes. Airlines use lessors for flexibility and to manage capital. But when you have a government, a sovereign entity, negotiating a direct purchase with the manufacturer and mandating local production offsets, well, it changes the dynamic.
How so?
Turkey is essentially structuring its own fleet expansion directly with Boeing, It reduces the immediate need for the kind of operating lease deals that companies like AER and Waldollar specialize in providing. They're kind of bypassed in this specific structure.
Ah, okay. So it's not that the market shrinks, but this particular deal structure sidesteps their typical role. Makes sense.
Exactly. It trims near-term placement opportunities for them in this context.
Got it. What about competition? If the commercial order is Boeing heavy, that implies a relative disadvantage for the other side, right? Airbus and its suppliers.
That's the other side of the engine story we discussed. If the volume goes to the Boeing MAX and its ELAP-1B engine, the G-Safran JV, then Pratt& Whitney, which is part of RTX, ticker RTX, well, their competing engine, the GTF.
The geared turbofan, which powers the Airbus A320neo family?
Right, they simply miss out on that engine volume for this specific large order. It's a direct competitive outcome. The volume went one way, not the other. So a relative headwind for RTX in this scenario.
And does that extend to materials suppliers who might be more aligned with Airbus?
You could argue that for someone like Hexcel, ticker EHAXLers, they're a major supplier of composite materials. Historically, their growth, particularly in narrow bodies, has been closely linked to the Airbus A320neo family's market share gains.
Because the Neo uses a lot of composites.
Yes, particularly in the wings and other structures. So if a huge order goes specifically to Boeing's MAX, Hexcel doesn't see the same direct uplift they might have if Airbus had won the order. It's a relative miss for AHXL compared to suppliers tied more closely to the 737 program.
Okay, so lessers, AER, Wildollar, face a structural headwind, and then RTX, and Hexcel see a relative disadvantage due to the platform choice. Any other areas? What about defense primes not involved in the fighter deal?
Well, it's more of an opportunity cost for them. Think about Northrop Grumman, NOC, or General Dynamics, ZOGD.
Companies focused on other areas like bombers, ships, ground vehicles, space.
Exactly. If Turkey's immediate large-scale defense spending focus is locked onto fighters, F-16s, maybe F-35s, and their related aviation package, then the budget and, frankly, the political attention isn't going towards those other categories in the near term.
So NOC and JGD aren't losing existing business, but they're not participating in this specific spending wave.
Precisely. It's an opportunity cost. The spotlight and the funding, for now, are elsewhere based on this news.
So wrapping this up, it seems the structure of this potential Turkish deal, especially that local production requirement, creates some pretty clear distinctions.
It really does. You have winners directly tied to the chosen platforms, Boeing, Lockheed, GE, and key suppliers like Spirit and TransDigm. And then you have others who are either structurally bypassed, like the lessers, or face a relative competitive disadvantage, like those aligned with the competing airframe engine families.
It highlights how these large government-driven procurements with specific conditions attached can really channel benefits very selectively.
Absolutely. The choices made on the platform and the insistence on offsets directly shape who gets the immediate business. It's a very targeted outcome based on the specifics reported.
Okay, that gives us a good framework for understanding the potential market impacts. Just a reminder to everyone listening, this discussion does not constitute financial advice or buy or sell recommendations. This is purely the opinion of the author.